All right, so here we have the dollar index daily on the left, 5 minute on the right. As I mentioned yesterday, if it was going to stay bullish, I did not want to see it come back down inside this suspension block. It had already used its consequent encroachment here, so that would be enough for my liking. So for it to resume being bullish, it needs to shake this retracement down into this suspension block off immediately. So tomorrow it would need to start showing willingness to want to go higher, or deeper retracements are most likely in order. We have relative equal highs up here. They stayed clean and we broke lower, had a consolidation in here. You'll look at the review or the live stream I did yesterday. It's kind of long, but I actually teach how to find the right fair value gaps. That it's highly precise, it's very systematic, and it uses the quadrants on wicks, and not only wicks, but it's also in the fair value gap and inefficiencies. So we have that area here protracted to the right. You can see that offered a little bit of premium sensitivity here, broke lower, and then over at midnight last night, we worked at the low of this old buy side and bounce sell side inefficiency that's shaded in pink. We traded up into it here, traded a little bit deeper into the retracement of this run. Then we broke lower, consolidated, and then we had a sell-off during the morning session for dollar index. Euro dollar still in this ugly range in here. I can't explain how difficult it is for me to explain what we're likely to do next while we're in this type of area, because it literally could go either way. So, that's the way it is. If you recall what I said, I'm not interested in Forex. I'm not interested in it at all because it's in areas where it doesn't have high probability one direction over the other. So that's why I stick with the NASDAQ. Okay. And it's really moving better than Forex anyway. But I know you guys want to know, so I'm sharing it now. All right. So there's a lot of business going on in here. I have this wick, a discount wick. I had that graded. And I have this longer wick right here. I have the lower quadrant annotated. That's what you see right here at that 1.163 level. And that's shown over here. Okay. And the immediate rebalance I mentioned, if we trade above that on a closing based on the daily chart, all bets are off. Then I think we're probably going to go higher on euro dollar. That would mean lower prices on dollar index. We haven't got that yet, but obviously we haven't closed for the day. It's kind of still a little early, but I have to get this done when I can. So the wick here, it's graded, and we see 1.16220. That's this level right here. And then we have 16325. That's the upper quadrant of this wick. See that? Now, if you look real close, we had price run up, trade into the 1.16380 level, which is the high of this discount wick with a closing candle price of that day. We wick up to it, the body stop and confirm here after a shift in market structure. We break lower down to the 1.16220 level. It's upper quadrant of the longest discount wick in here. We rally back up and we go right to 1.16325. It stops dead to the tick right here. It's probably random. We break lower, trade down into bullish order block, which is the last two down close candles here consecutively with a fair value gap. Hint, hint, nudge, nudge. And then we rally up. We have a buy side amount, sell side inefficiency after a breakaway gap. Okay, so we have a breakaway gap, fair value gap. It trades down into it, sends it higher, a measuring gap, rally up, and institutional order flow entry drill inside the measuring gap, and a buy side balance, sell side efficiency. There on top of that 1.16325 quadrant level, which is the upper quadrant of this discount wick. Able or British pound versus US dollar. It's had a nice showing after running down to its lower quadrant of this premium turn discount wick. Traded down to it perfectly. And now we've seen it deliver all the way up to the high of this wick and traded even higher into this candlestick's wick low. Now, why am I not using this one here? You're going to be wondering why. It's because this one basically lays right on top of the opening price of this candlestick. And whenever there's a shared value of two PD arrays, I'm going to look for something else that's going to be outside of that. So it gives me a better filter for looking for levels instead of just demanding that, because this low and this opening price basically is the same or very close to it. I want something that's different, and that's right here. We're seeing this wick here. So that's why that one's graded. And you can see the levels over here. My eyes are so 1.34009. That's this level here. So the next one above it is the low of that wick right there. So 1.34009 is the low of that discount wick. But when we're trading up to it, it's going to act as a premium array, drawing price in, hits it there. So drawn up into these levels after leaving all of this consolidation. This is very similar to what I outlined yesterday in the live stream, which is a setup that forms every single day during the New York morning session between 7 o'clock in the morning, 10 o'clock in the morning Eastern time. So it's a 3-hour window. And you can do all the setup hunting you'd ever want to do in those 3 hours. You don't even need to trade anything else. But I want you to look at the 1.33637. This level right here. That level is this right here. Consequent encouragement of this discount wick. On that level, we have an old buy side balance, sell side efficiency. We have a breaker, low, high, lower low, right on that level as well. And then we have the reclaimed fair value gap there and breaker. And then look at the price here. If you grade the buy side balance, sell side efficiency, look at the low tapping right there. And look what the bodies are showing you. They're staying in the upper half, but only wicking down, allowing you what? Expectation is going to go higher when it careens off into this candlestick's low. You can see that being done beautifully there. Fair value gap there as well. Another bullish fair value gap that's reclaimed over here. You can see the lower quadrant nailed it to the tick there as well. And then the bodies, look at the bodies right there. It's indicating that it's not wanting to go lower. It's bullish and then takes off. That is my language. That's algorithmic price delivery. It's algorithmic tape reading signals. It's like billboard signs saying, look at me, I'm getting ready to go up. I'm getting ready to go up. And I talked about this yesterday. I talked about it a lot in mentorship lectures too, but a lot of you guys weren't there. So you just have to take my word for it. October 15th, 2025 for the index futures market. And obviously the one I'm focusing on primarily still is just the Christmas December contract for NQ mini futures. I think we're starting off with the regular trading hours chart here. So regular trading hour shows the difference between where we settled yesterday at 4:14 p.m. Eastern time, and then we opened up at 9:30 Eastern time. So that difference is the opening range gap, or regular trading hours opening range gap. And it's abbreviated by RTH-ORG. The high is the opening price because it's higher than where we settled at the previous day. That's regular trading hours opening range gap low. This is also the price level that you would have noted as the 9:30 opening price. Okay, so you can always add that in the description as well. Midnight opening price, Eastern time, I mentioned that yesterday in the live stream, you want to have that price. And then we had a sell side liquidity pool, and we'll look at that in here. I kind of posted that already and stole the thunder, but I told you you needed to do this for your homework. But the market trades up into this fair value gap, which is the SIBI. I told you to have that and grade it, and those levels were shown to you yesterday. And 25, 111.75, that's this level here. And man, it's almost as if the stuff I teach works precisely. The market rallies up, stops dead in its tracks, looks like a big bull flag, and then it's not a bull flag. Okay. And then we have a sell side balance, buy side efficiency. We hit it here, return back into it, break away from the consequent encouragement of that daily SIBI, which is this candlestick's low, this candlestick's high. There's that 25,0630 level there. And we break. We come back to regular trading hours, opening range gap high or opening price at 9:30 Eastern time. We trade through it, come right back up, hits it. This is how you see it as a short. You have all this unfilled price action. It traded there overnight in electronic trading hours, but in regular trading hours, it's like a big vacuum. Remember I was telling you that if you have, the analogy I used was these vacuum sealed bags, and you use your vacuum cleaner to suck the air out of it, and you can store things much more efficiently because it flattens it down. When you break that seal, what's going to happen? All the air is going to go rush right back into it. Well, that's what's happening here. When you break the seal, it goes back to the regular trading hours opening range gap high or 9:30 opening price, hits it, starts to break down, trade right back up, and then we go right to inside the opening range gap quadrants. So here's opening range gap high, upper quadrant, consequent encouragement, lower quadrant, low. Okay. And we have price breaking aggressively here, consolidating, one more break lower, trading back to midnight opening price, and trades to the lower quadrant here, takes one more time, touch that before it breaks lower, and completely closes in the gap. Now I want to take you over to the regular trading hours chart. And I showed you on Twitter or X this in here. And then we rallied up and we come back right back down in. During the macro, 7:50 Eastern time to 8:10. That's my ICT macro time. This trades right down into a quadrant level. I want you to look at your charts and you'll see it. It stops dead right on it to the tick during the macro. It's probably random. And it rallies up, consolidates, and then we have this drop down at the opening price at 9:30. So opening range, first 30 minutes. It's not 15 minutes. I don't care what anybody tells you. It's a 30-minute interval. We drop down during the first 30 minutes. And then the first presented fair value gap here, we trade, excuse me, we trade down into the low of the morning, and then we rally back up to first presented fair value gap, which is now going to act because we have relatively equal highs up here, smooth edges. I was in Lumi Traders on live stream. I called this out live to watch the first presented fair value gap and then use this as the draw. And we opened up with a run here, dropped down into consequent encouragement, and then volleyed higher, taking out the 25,025 level. That was the only thing I had time to kind of like illustrate. And then it rallied up even more. It went back to regular trading hours, opening range gap high, accumulated more here, and ripped higher up into 25,110 and 111, which is here. That's this upper quadrant of this SIBI. Perfect. Are you starting to see what I mean by I'm not surprised by these things? And when everybody in the past has always said, you know, he's got to be cherry picking, he's got to be photoshopping it, it's got to be something extra, it's got to be all these different recorded devices, and then he picks the one that works perfectly. I don't need any of that stuff. Like, I don't need any of that. Like, I don't need crutches. So you can see how the things I'm teaching you, just like I did in that live stream yesterday. That live stream yesterday, while albeit vulgar, it was literally me giving you a master's class in price action, algorithmically, with my own language. That way you can see It's like me pulling the veil back, and you can see the real me. Like, this is the stuff I have had for decades, and nobody else has had it. And I'm just revealing a little bit of things that people say all the time, like fair value gaps and imbalances and order blocks. It's a guess. Wrong, Cubby. This is precise. It's really, really perfect. It's perfect. And when you understand the science, when you blend them together, all you're doing is waiting for that to agree with time. Time. When this market turns here, it's entering a macro. This at this price, the opening price at 930, it's during a macro. It rips and goes higher. It spends its time up here, time distortion, then it folds, goes lower, trades right back up into the opening price at 930. We consolidate. This segment of price action here is just the overlapping of this rectangle in pink and this being in a different hue. So it's going to give you this kind of color here. That's not me showing any kind of like inversion fair value. I mean, that's what I'm not representing there. The inversion is the yellowish, almost pale orange, what's being shown here. This discoloration is just because they're overlapping. There's nothing I can do about that. So we trade back to first with the fair value gap in here, and then we fold over down to lower quadrant of the opening range gap, down to the full closure of it, and then we trade down into 0.75 or the lower quadrant of this wick, because now we're working back down into the range of this candlestick. So if once we go below this candlestick's closing price, we have to have these levels in mind on our chart. And you can see it trades right down to the lower quadrant there at 24,672.5. Or I'm saying up, it should be saying the upper quadrant, not the lower quadrant. The upper quadrant here at 24,672.5, and that's what you're seeing here. And if you go even further, you'll see that there's relative equal lows here. The one to the right is slightly higher. That means it's a strong candidate for a run on liquidity. And it dove all the way down, hit that end upper quadrant of this discount wick. And then look at the repelling back up that it showed here. Pretty wild volatility. I told you that was going to happen. Yesterday, I told you that's what's coming. And if you're not careful, if you don't know what you're doing, you're trying to trade without stop losses because you think you're going to be better than the average bear, you're going to have your clock cleaned. And there's just simply no reason for doing it like that. So that's it for today. Short, sweet, direct to the point. And I'm going to wish you all a very pleasant evening. And if Lord willing, I will touch base with you tomorrow.